Hey guys, welcome back to the channel, your number one source for income-oriented investing, and the explosion of income-oriented funds on the American stock market continues. Today we're going to take a look at FEPI, very highly requested from Rex shares. This is my opinion, the most worthy sector-specific covered call ETF that finally has come out on the American stock market. So it's the Rex FANG and Innovation Equity Premium Income ETF. So this is a technology covered call ETF, everyone. Let's take a look at it. So first thing you'll notice is the expense ratio, very decent at 65 basis points. And when it comes to, of course, the holdings, which is going to be the most important thing right off the bat here, it's 15 companies. So these are the, I think, top 10 right here. But if we go to the this is the fact sheet, you will see the 15 companies here. So you'll recognize a lot of them. And there's a couple of things to notice and to understand, and we'll go in the prospectus. So this fund, or this FANG, the Selective FANG Innovation Index, which is probably an index Rex just came up with themselves, there's going to be 8 core components. So, these 8 stocks are always going to be in those 15 stocks. So these are like core holdings of the 15 stocks that they're going to choose. And you'll recognize all of them, right? Apple, Amazon, Meta. It's basically the Magnificent Seven plus Netflix. That is the 8 core components of the index. So we're always going to expect those 8 companies, from what I understand, in the list of top 15 holdings. But then they say that the remaining 7 stocks within the index are determined by selecting the top traded names from a universe of these industries: semiconductors, electric components, telecommunication, computer processing hardware, which I find is very interesting because one thing I didn't notice, the rest of the companies, is that they're mostly chip makers. You got 40% of this fund, guys, in chip makers or semiconductors, right? AMD, Broadcom, Intel, Micron, Qualcomm, Nvidia. So 40% of this fund is going to be in the chip makers. So if you like the chip makers, this might be a good option for you. For sure, if you like technology, but you like more the chip makers instead of the software. And of course, there is some software companies like Adobe is there, Salesforce, and then you got the rest of the Magnificent Seven, and Tesla's there as well. So I really like actually the stock selection here. So that is the stock selection, very important. That's got to be the first thing we understand when we invest in the fund. What are the stocks inside? So 15 of the top technology companies, guys, that's how I see it, with a nice little chunk or focus in chip makers, and the Magnificent Seven is there as well as Netflix as well. Management fee very reasonable at 65 basis points. And another thing to notice is that it's going to be equal weighted. They want to do an equal weight here. So let's just go through the parts that I highlighted that I feel are important. While market capitalization weighted indices can be dominated by a few of the largest stocks in the index, like Apple, Microsoft, Nvidia, or like really take a lot of the room in an index, in a market cap weighted index, the advisor believes that an equal weighting allows for a more diversified portfolio. So there you go. You're going to have equal weighted here, and it's probably going to be rebalanced, obviously. I think it was, I can't remember if I read it was quarterly or monthly. I don't know what the rebalancing is, but there's a rebalance to make sure that it's going to be more or less equal weighted, which is also information we need to understand. Now, of course, the second most important part when you invest in an income-oriented covered call ETF, you got to understand what stocks are exposures. We checked that. The cover call strategy, right? So the advisor intends to write call options that are slightly out of the money, which will allow for some capital appreciation as well as income generation. So there you go, guys. Out of the money calls. They do say slightly out of the money calls. I'm assuming it's going to be anywhere between 2 to 5% out of the money. Looks like these are monthly calls as well, guys. And in terms of coverage, they don't really specify how much of the portfolio they're covering, but I could take a super well-educated guess that it's going to be 100% of the portfolio. Why is that? Well, because of the tremendous yield that this fund has been able to generate. There is 4 distributions that have been declared, and they've all been very similar, and we're looking at an approximate yield of 25%. So an absolutely monster, phenomenal yield, guys. This is why, in my opinion, it has to be 100% coverage, but with out of the money calls. Because if we just look at other technology covered call ETFs on the Canadian stock market, like HTA, for example. HTA does covered calls on up to 33% of the portfolio, a third of the portfolio, not like 100 on FEPI, or I think it's 100, and it makes a yield of 8.13%. So if you're doing and Harvest also typically does out of the money calls. So 33%, if you're doing out of the money calls on 100%, you're looking at approximately triple the yield. You're covering, triple the yield, right? Because 33 makes 100. And if you triple the 8.13, it's approximately 25%. So pretty sure that the cover call strategy here is 100% portfolio coverage, but out of the money call. So you're always gaining a little bit of upside or capital appreciation or NAV upside, however you want to call it, if these stocks go up. But I would say this is a fairly aggressive income-oriented yield-first approach because, obviously if you're getting a 25% yield, guys, they are writing a lot of covered calls. So lots of yield, only a little bit of upside. So I believe most of the return of this fund is going to come from the yield. So perfect fund if you're a yield-first investor who loves technology stocks. This is a good alternative if you want something even more concentrated than the NASDAQ 100 covered call ETF, because this is only technology, 15 companies that have, technology is very important. I think it's the future. And you like these the big boys. So you like technology, you like the big boys, you like yield. This is a phenomenal fund. This is probably one of the very rare covered call ETFs listed on the American stock market that's sector specific. We have 1 million in Canada, but the US has been practically almost all index based funds or diversified. And this is actually a worthy one. And if you love the chip makers as well, 40% of this fund, guys, is with the chip makers: Qualcomm, Nvidia, Micron Technology, Intel, Broadcom, and AMD. The major chip makers are there, so there's quite a few of them. And if you calculate the percentage, which I believe is 6 out of 15, right? Was it 6? Yeah, 40% of the fund is in the chip maker. So fantastic big cap, big boy, quality technology stocks with fairly aggressive covered calls, in my opinion, but they are out of the money, so you will get some upside. And if we compare to the Canadian ones, there's HTA. I think it more closely matches QMAX, because QMAX has actually 15 companies, just like FEPI, and it has a lot of the same companies. There's a couple of little differences. There's Intuit, Texas Instruments, which is not in there. Instead, they put Micron, which is not in here. They put 2 additional chip makers. So very similar to QMAX, with, of course, a much higher yield because they're covering 100% of the portfolio, whereas HTA is covering a third and QMAX is covering 30%, but they're doing at the money calls here. So very interesting, guys. If you're a yield first investor, you like technology, what can we really compare this to? Well, we need to compare it to a technology index fund, which the biggest one is from Spider. It's XLK. So this is biggest technology companies, no covered calls or anything. And as we would have guessed, or as I would have definitely guessed, the index is obviously outperforming because technology stocks have done really, really well, especially chip makers, right? Nvidia, et cetera, in the last 4 months. So obviously XLK is going to outperform FEPI, but FEPI is doing a pretty good job. Obviously, you're giving up upside, right? If you're writing covered calls on these stocks, you're sacrificing upside when the stocks go up for that yield. And hey, 25%, I am very, very impressed. And I'm also impressed that the latest distributions have actually been very, very stable, very, very close. $1.15, $1.18, $1.20, $1.19. And that's why, out of the money calls are good because you are capturing some upside. So fantastic ETF, guys. Now, is it ideal to live off of? Is this an ETF where I feel personally, this is my opinion, of course, where you could just pull all the distributions and be okay? It's possible, but I still think the magical range is 10 and 15%. This one is 25% yield. So I think if you are living off of FEPI, maybe you can live off of this 25% yield, but I still feel like maybe you should cap it at 15% instead. right? So I think you should probably, in my opinion, if you want to live off 15% of the yield, you need to reinvest 40% of your dividend every month. So if this yield stays about the same at 25%, and if you reinvest 40% of your monthly dividend, right? So if it's $1, you're investing 40 cents back into the fund. You're kind of living off 15% yield, which is very nice. And your capital is going to stay relatively very safe over time. But hey, if technology stocks keep going up, this ETF stock price is going to keep going up a little bit. So it could very well be feasible to live off 25% yield and off this fund. But if you want to be a little bit safer, I would say to reinvest a little bit of your distribution. How much you would reinvest is up to you. To me, you want to 15% is that magical range where it's safe. So I personally would reinvest something like 40% of the dividend. But if you want to be more conservative, you reinvest 50% or 60%. If you want to take a little bit, you're really a yield first investor, you could reinvest none of it or maybe 10, 15, 20%. So that's it, guys. Very important to keep your eye on this one. I think it's one of the rare, finally, some sector specific covered call in the US. Hopefully there's more. I would love to have a US bank one. I would love to have more sector specific stuff. It's really dominated by the index ones, right? JEPI and GPIX and iSpy and SPY-I and QQQY, JPY. That's, I think 95% of the market. Covered call market is with the index-based ETFs, but hey, hopefully there's more of these that come out. And I can't think of a better sector to do than technology to do covered calls on, because there's volatility and there's growth as well. So you could really get that nice yield. You're looking at 25% yield right now, approximately, based on the last 4 distributions, which have all come out and are very, very similar. So keep your eye on this one. If you love technology, you're a yield first income investor, this would be a good one. No leverage here, very decent MER of 65 basis points. So yeah, this is definitely a good one. So that's it, guys. Give me a thumbs up. I would really appreciate it. Do you like FEPI? Have you invested in it already? What is your percentage that you feel you should put in this? This is a sector specific one, 15 great companies, but I feel like, my opinion, it shouldn't be a core position because it's not really diversified, but this could be a very strong secondary position if you like the tech sector. So hope you enjoyed the video and this review. See you next time. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the ultimate DIY investing package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and US stock markets. And the good news is you'll only ever have to buy it once, because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and Passive referral links below. So Questrade is the broker that I personally use, and Passive is the broker companion tool or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And Passive, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of Passive is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram where you could follow us or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.